Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed. So, an interesting start to the week with the big drop in the big tech yesterday. Probably one of the things I'm the most puzzled about. We're going to cover off some of that today. But I want to focus in on the sectors that have performed the best over the last week, and that's healthcare, energy, materials, and staples. Transports are starting to slip, and the NASDAQ is right at a pretty important level for me, one of the things I like to watch. And then the semiconductor chart is improving, and obviously that got helped by earnings last night. But we have lots going on here, and it's not immediately obvious which way this all unfolds. So why did that happen? I had this set up for you, and now it just changed on me. My mistake. Sorry. Windows. There, that's better. Okay, so what we have here, this is a chart that I keep, and it's 10 panels long. Pro users could do it. If you don't have the Pro, then just break it up into smaller panels. But what I do is I keep the VIX at the top here, and this is just a 100 period moving average on a 60-minute chart. Here's the S&P 500, and you've got the upsloping moving average, and you've got this price action coming down. So far, the high was right on options expiration day, which was Friday. And one of the things that we're starting to see is the MACD here on the S&P move below zero on this 60-minute chart, and I'll zoom out for you in a little bit. The NASDAQ is right at the 100 period moving average, which is roughly the 20-day moving average. And the Russell has already broken through, and today the Toronto Stock Exchange broke through it as well. Natural gas is trying to get going. Oil, with all of the tanker talk in the Strait of Hormuz, has been pushing up gently. There's still lots in inventory, but that story continues to work. And gold is finally having its first kind of down open for a while. Moving along. I still like the gold space. I would just be cautious here. Yesterday, the gold miners started to underperform the metal, and usually that's just one of the things when they don't keep following it higher, you might want to pause. Now, if that's the case, I would expect it's more. Just needs a pullback more than it's actually done the gold trade. But for now, you might just need a little bit of a pause here. And then the TLT, you can see it's been grinding sideways, and I get the feeling that they're trying to at least make a tradable bottom here. It's not tradable for most of us. It's just more of an information flow on what bonds are doing. The problem with this scale on TLT, so here we are, $130 to $133. So over a 2-week period, this thing is moving, some parts of $3 on $133. So like a 2% move over a 2-week period. It really doesn't have enough volatility to get long or short for most of us, but it's really understanding what the bond market is doing that helps us there. So we want to talk a little bit more about the macro setup, and I'm going to show that through a couple of different ways this morning. And then the UUP, which is obviously the ETF that tracks the US dollar, made a low yesterday and is gently climbing higher. So on a daily chart, this would look like something big. On an hourly chart, this is literally just one day off the lows and nothing really major to talk about. We are below the 20-month or the 20-period moving average on the daily. And again, that's a real rough calculation, but on the 60-minute chart, it's a 100-period moving average. So the idea behind going through all of this, going back up to the top here, is that we see that the S&P 500 is still above the moving average. The VIX is starting to turn up a little bit, and this MACD is below zero. So I'm going to just scroll down quickly to the bottom and change the setting here. And one of the things I just want to show you, if we roll this out to 6 months and update this, is just when the MACD for for the S&P 500 is below zero. It's, that's a good place to start thinking about caution. And if you're below this 100 period moving average, it's also a good place to just, be more aware of the potential for the market to break down. So we're still trying to test early May's highs, and we're right at this moving average within a couple of strokes of it. So as these G20 talks get going, obviously we're going to have we hope there's a deal, there might be a deal, there is a deal, there is no deal conversations. The market's going to bounce on every one of those. I think more importantly is that, and I'll show you on the NASDAQ chart in just a second, is that when this MACD is starting to go below zero, and we just saw that it's at least cautionary. And if the Russell and the NASDAQ are underperforming, it's a place to be aware that there's potential for trend change. On the NASDAQ 100, we have this upslope that goes for 3 years, which is the NASDAQ outperforming the S&P 500. And currently we're sitting just above that line. So as long as that line holds, we're probably in good shape. The concern we have now is we have this ridge that came up to the top in April, pulled back all of May. And now the question is, are we making a divergent high on the PPO indicator? So what that would mean is we have a lower high here, a higher high, or a similar high in price here. And that would suggest that the momentum is coming out of this. Until this purple uptrend line breaks in the big picture, we're probably still fine as long as the NASDAQ can hold up. That's a pretty important place on the chart for us. So let's talk a little bit more about that. And I think probably everybody has seen the stories where Microsoft is doing all the heavy lifting on the index, et cetera, et cetera. This chart is just 10 panels or 7 panels of all of the kind of big tech stocks. So it's Amazon. And you can just see we're not really going anywhere here. Here's September of last year. We're still below that level. And we've been declining for about a week now on Amazon. Looking at Apple, it's actually having an okay day today, but it's been trading below its May high still by about $10, nothing major. Facebook is just below its high. And so in all of these cases, we still have this situation where a lot of these large caps haven't been able to keep pushing higher. Microsoft, of course, is the differentiator. Google clearly not anywhere near its May highs, and continues to look like it's more involved in a downtrend than an uptrend. Netflix has grinded sideways since February, really hasn't made any money. And here's Microsoft. That's one of the few that have broken out to a new high, and Adobe, of course, did as well. But yesterday was a big setback for almost all of those on really no news. So we want to continue to watch that. And the reason that I'm more focused on that is we're after options expiration day. And I think for those that have listened before, that tends to have a lot of influence in the way I think about the markets. A lot of times we'll see high volume days, and then we'll see a big switch in direction in the markets. I just do, make sure I have one more thing here I want to show you. So these are some of the software names that have been performing well lately. And here's PayPal. And it's still up in the top right-hand corner, but roughly a week off the highs. This is Atlassian team, and they're trading sideways at best, kind of where we were on early May. Visa just keeps going. These credit card companies are just nice climbers. They just keep working their way higher. But all of them had a big setback yesterday. So I am wondering if we're going to start getting some mood change. Shopify has been one of the clear outperformers. This stock goes from 120 to 340. And you can see that it's pulled back, 17 or 18% just since Thursday or Friday of last week. So big moves both ways. Anyway, still a tremendous stock, looking great. I would just say we're starting to crack that uptrend line for the last few months. And after a 200% gain, it probably needs a little time to relax. And looking at ServiceNow, you can just see all of these are kind of still drilling in the right-hand corner. They look very bullish. So we don't see any real problem there. Okay, going to the members page, and again, I find this page extremely helpful to use when I'm looking at the markets. And what I like to look at here is just the percentage information on how the NASDAQ is doing compared to the others. And the NASDAQ is clearly outperforming today. So that gives me a bullish tinge to my thought process, and I like to see that. Looking through the major indexes, here's the transports, and I would just say that this transport picture doesn't look very rosy, and there's a real head and shoulders top set up here, with this being the left, the head, and the right forming right now. I think it's pretty important that we hold that 10,000 level, and so continue to watch that just for clues on maybe on the old economy rather than the new economy, but nonetheless still probably a trade-focused indicator for us as to how much is actually moving around. I'm going to go down to the industry indexes and just work through these quickly. But one of the things that I'm noticing is, you can just see here's the airlines, and they, quite frankly, they haven't done anything for 3 years. So that's not a really good one. But this is the banking industry, and what we see here is, real sideways consolidation since early February. And I know the S&P has gone on to new highs, but the banks are basically sitting at the low end of the range and very close to, call it 96 here. We need to obviously see that improve if we're going to get much movement. Biotechs, I think that chart's self-explanatory, but this is the longer period moving average, and we're sitting below it and quite, not really looking that bullish at this point. This would need to turn up and get me excited. Broker dealers, same thing. We're testing this upsloping trend here. Same sort of topping formation. So the topping formation going back 6 months is setting up. Now, the real question is, does it play out, or do we actually break out of this consolidation? And that would be an important thing for us to get. Chemicals, this one is trying to improve a little bit. Commodities is the real surprise right now. Obviously, with the US dollar pulling back, commodities have done quite well, and they continue to work their way higher. So that one's starting to, I know it's been off the radar for a long time, but that one's starting to look a little better. Computer technology, that one's okay. This disk drives chart is starting to improve, really making 1 month highs here and starting to climb. Again, the moving averages don't give us any comfort. They're all sloping down, so that's a bit of a problem. Drugs are having a tough day today. They are really pulling down hard, and this is after a breakout above the prior high. So this is, to me, it looks like a failed breakout. And I think what we want to watch for here is perhaps this could start to lead some of the sector rotation. If we were going to lead out of defensives and stuff like that, we'd want to see things like this failing of well, this is making a new high now. All of a sudden it fails and starts to fall away. And then, we see something like disk drives or whatever pick up. So we're starting to see this side go up and the defensives fall. So that's one of the things, areas to watch for pretty closely, I think. Gold was having some pretty big, wild, volatile days in the last few days, so it might just need some time to consolidate. Mentioned that before. The hardware index, this is kind of where Apple and some of those are sitting in. You could see not bad, sitting above its long-term moving average, just kind of grinding sideways for the last 2 or 3 months. Insurance has been doing great, and it continues to climb. Natural gas, very poor. Perhaps the chart can start to build. We'd like to see 1 month highs on that chart before anything really is going to happen. Networking, nothing really helping us there. Oil, this one is on the move. And again, I think between the refinery fire and the problems we had in the Gulf, we might see the integrateds, so the companies that have refineries, actually start to perform a little bit here as they have to provide more product. Oil services, this one's trying to get going, making a new 1 month high. Still not my favorite place to play. I'd rather look in some of the other areas. Looking through pulp and paper, trying to get this lumber area starting to turn back up again. It's just been grinding sideways for a few weeks now. REITs are really falling apart here, and that's one of the concerns. We've noted that lately, that the REITs haven't been performing as well. And if I just showed you the sector ETF, this is over the last week, and you can see real estate is clearly out of favor. So watching that fall so hard is quite important. I think if this starts to break this 4 or 5 month line, that might tell us we're actually going to start to rotate into more aggressive sectors, and that would be helpful. Retail still doesn't look that bullish, but it's trying to make a higher low here. Oil services already covered, sorry. The retailers, semiconductors here, trying to break out to new highs. And so between the disk drives and the semis, there is some optimism here that's starting to show up on those charts. So it's a place to look. The transports, I think this is one of the big problems. It's grinding sideways, and I mentioned the railroads last week. They're really trying to hang on to their relative strength, and I think in order for that to work, that would be a big deal. And the utilities chart here, still pointing higher, so can't argue with that. I think the problem, or the thing I'm starting to see, is perhaps we're going to get some rotation into the semis and the disk drive, so the high tech might start to improve, but that's not what we've been seeing so far. So it's a pretty important week on the charts to just see what's going on. From a 1 week perspective, materials, obviously this has some of the gold in it. Energy's been moving up based on the Strait of Hormuz situation. Staples still performing quite well, but the healthcare, don't get me wrong, it's still positive relative to the rest of the S&P. And I have this button pushed over here. So what that does is it says, of the move in the S&P, who's been leading it up and who's been trailing. If I push and turn this off, this is the absolute move, and it's actually pretty close. Doesn't really change that much. Down here on the bottom, I can right click on this. And for the month, you'll see everything is up. Materials obviously doing very, very well. But if we click it now, all of a sudden we start to see it broken down into two different groups, and the area of the market that's starting to shine. So with that, I'm going to stop for a quick commercial break, and then we'll be right back. So we started off talking about the S&P 500, and just that it's starting to get to this ticklish situation here where it's moving towards the MACD is moving towards zero on a 60-minute chart. Again, big picture stuff doesn't matter that much. The big picture issue was the NASDAQ getting close to this trend line, and we want to see that continue to hold. And when we went through the individual NASDAQ stocks, with the exception of Microsoft, they don't look like they're ready to kind of all break out together. So that's an area that I'm watching quite closely. And this lower momentum right now, I think, is a critical place on the charts. What we did see, looking across the perf chart, was that energy over the last week or so this was 1 month, energy over the last week was starting to improve quite a bit and was one of the better areas. So if we were going to look at that, one of the things we could do is we could go and run a quick scan. And this scan helps you find relative outperformance. So one example would be, we set it up so just search the energy sector and then say, and what is outperforming the S&P 500 over the last 60 days, 60 trading days. And the way we would describe that is just, it's got to be greater than zero. So percent relative performance, if the S&P was up X, this would have to be bigger than X. So if S&P was up 5%, this would have to be bigger than 5%. Now, again, we can change this to be a 5-day scan or any timeline in there. Let's just go with 3 months. And the idea isn't to make a big complicated scan. We just want to see the data and then run with it. So when I run this scan, we get some scanning results, and I've dumped these scanning results into a chart list. And the reason behind dumping them into a chart list is then we can do a little bit more with this sorting. So what I did was I sorted it by industry group, by scooter, by industry group, and then we can quickly look through. Now, this is only going to show the stocks that have outperformed the S&P 500 over the last 60 days, not any time during 60 days, literally taking a point in time 60 days ago and today and say what's outperforming. So this this relative strength just says that it has to be higher than it was 3 months ago. When we look through here, exploration and production, and these charts are okay, but this CVR Energy, this is a really nice chart. It just keeps climbing. That's pretty nice. Here's Par Pacific. This one looks, like it's consolidating a big gain and might be ready to break to the upside. This particular pattern is very, very common. So we're seeing these bases being built in the oil stocks, and if they can start to break out to the upside, obviously that's going to help. And this stock is already above its April-May highs. And so with that, what we see is the scooter ranking is up around 80. Now we'll go find some of these other ones, and they haven't broke out yet, so the scooter ranking is just a little bit less. But you'd see this same basing pattern. Woodside, big company out of Australia, this one is trending sideways, same thing for the last 6 months. Diamondback Energy, that same pattern showing up again, sideways for 6 months. Crescent Point trying to build that same sort of a base. Now, these other ones here are all penny stocks. The next few are penny stocks, but here's Cross Timbers Royalty. And you just see that chart is setting up the same sort of way. So I don't know that it's time to enter the energy sector yet, but I will say some of these charts are trying to get going. And this particular one, Geopark, wouldn't take much to all of a sudden go through 20 and be at 52-week highs. This one still has a large enough price, so we're at $48 here. And again, a big run and consolidation for the last 2 months. We'll just see if it can break out. Here's the integrated oil and gas, and this Gazprom chart has just been rocketing up. Very hard to enter, but from $5 to $7, so a 40% gain in a little over a month. Here's Hess, and this one looks like it wants to break that downsloping trend line between the October high and the April-May high. So I like that chart. Getting in on this Sociedad, you could just see when we move to these bigger charts, the breakout is starting to look much better, I think. And with that sort of trend development, this is places where we can get on board some of these stocks. But the reason I wanted to point it out was energy started to show up on the perf chart. It's starting to show up in terms of these bases being built, and now we want to start to find some of the stocks that are actually starting to make their moves. And this NGL Energy Partners, obviously a nice chart drilling up in the top right-hand corner. Next decade, this one's starting to move. And so Royal Dutch Shell, still, traveling sideways for the last year, but nothing wrong with that chart. At least the last corner is up. All of these are different versions of Royal Dutch Shell. So here's another Russian company, and you can see finally breaking through the 200-day moving average. Very simple. And here's one, Dorian LPG, just starting to break out to new 52-week highs. Again, a reason to get back onto this. I want to go back and look at the chart list in its summary mode. And the reason is because after doing all of this sorting, I'm going to just scroll right to the bottom and look at how many in the renewable energy equipment space, a lot of this is solar or whatever, are starting to show up. And so just looking at these charts, this one's just making pretty close to new 52-week highs. Solar Edge, this one did make new 52-week highs recently. Real Good Solar, this one's pretty much too low for me. Jinko Solar, nice breakout. Right now it's testing its breakout level, so this would be, if it starts to bounce from here, a nice entry. Hydrogenics, this one's been really rocketing up since middle of March. It's up 50%. Global Clean Energy, this one's just breaking out again. Canadian Solar, the chart doesn't look as good, but it is at new 3-month highs or near 3-month highs. This Ballard Power, those of us old enough to know the name, big in the renewable fuel cell business, and this chart is starting to shape up, so that's nice to see. Vestas Wind trying to get going as well here. So we're starting to see some outperformance in these solar names. This Sunrun, this is obviously a nice breakout to the upside. And SunPower, again, just real recently jumped on a 20% gain or 25% gain, and this Enphase Energy has been really moving higher. So any sort of a pullback, that's a nice place to look. Now, again, how did we get to that group of stocks was literally just looking for price relative outperformance with the scan engine. So again, just by changing this number, we could say set it up for the last 5 days and say what's outperforming in energy. And then that would give us a list of stocks that we could go and look at. It all depends on your timeline. For me, it's longer time frame, so I like the 60-day look. Now, obviously, if we change this, and you can have these groups set up, you can do whatever you want. You could just take it out and then run this scan now with the technology sector and say what's outperforming, and we'd probably get a much longer list. But the important thing is to just set up these simple scans. They don't have to be too complex. Just make them quite simple and run a quick scan. So I just call this my group an S&P relative performance scan. And when I run this scan, what I want to do is just check to see what's working inside a group. Again, if I want a different group, I'm going to go down here to the bottom, and let's say I want communication services sector. I could grab that header, or I could grab each one of these individual components in here. I think it's more important to just kind of think of it at a sector level. And if, in the case of gold, obviously everything lit up all at the same time. But a lot of the gold stocks, even before the May breakout, a lot of the gold stocks were sitting there with very high scooter rankings and were starting to look pretty attractive. So it wasn't like we didn't know it was coming. It was all set up for us with lots of stocks as top performing setups. They were living in the right-hand corner of the chart, the top right-hand corner, and all of a sudden they popped and started to break out to new highs. Now, when you're using these relative strength scans, again, if the market is falling, this scan is going to show you stocks that are not falling as fast, or it will show you stocks that are actually climbing. They still require a little bit of finessing or fine tuning to make sure that you're getting the data you want back. My main point today is that it feels like the market is trying to rotate, and that pullback in tech yesterday didn't give me any comfort. But one of the things I'd be watching for is if we start to see these pharma companies start to underperform after testing their previous highs and failing, and then we start to see, say, semiconductors break out or whatever. I'm sure there will be lots of news around the G20 meeting this week. But the bigger issue for all of us is as we go through this G20, I think the volatility range is going to go quite a bit higher. But I think a failed sort of agreement with between China and the U.S. here puts these charts probably on a mark lower for the rest of the summer or into the summer, and then play it by ear how that goes. But I think this is a pretty important opportunity for us to be able to maintain that level. The energy sector, again, I don't think you want to play in the oil services. I think you want to play in the mostly in the integrated oil and gas companies with refineries. Okay, so thanks for taking the time to join me on Market Buzz. Market Buzz airs live Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. Thanks for taking the time to join me. Have a good week.